Hey everyone, welcome back. In this video, I'm going to walk you through exactly how to use the Valhalla Scalper, from reading the signals on your chart to knowing exactly where to take profit and place your stop loss. We've made some major updates to simplify everything, so whether you're brand new or you've been using Valhalla for a while, this video will get you up to speed. Let's get into it. The Scalper works on one simple idea. Price tends to bounce between zones. Our algorithm uses sophisticated calculations to identify when price has stretched too far from its average, and that's when it gives you a signal. The workflow is dead simple. You get an entry signal, you take the trade, your take profit target is the nearest liquidity level on the chart, and for your stop loss, a 1-to-1 risk-reward setup is recommended. That's it. Signal in, liquidity level out. Let me show you everything on the chart. You've got three things to pay attention to: the trend ribbon, the entry signals, and the liquidity levels. Let's break each one down. This colored ribbon on your chart is the trend filter, and it's the first thing you should look at. When the ribbon is green, price is in a bullish trend. When it's red, bearish. Here's the key. The trend filter controls which signals appear. In a bullish trend, you only see buy signals. In a bearish trend, you only see sell signals. This cuts out a huge amount of noise because you're never fighting the trend. In the settings, you can customize this. By default, it uses a 200 EMA, which works great for most setups, but you can switch to SMA, VWAP, Hull MA, or double EMA, whatever fits your style. The really powerful part is the time frame setting. You can leave it blank to use your chart's time frame, or set it to something higher. For example, if you're scalping on the 5-minute chart, you can set the trend filter to the 1-hour time frame. Now your 5-minute scalps are aligned with the 1-hour trend. This is what I personally recommend. The ribbon width setting controls how thick the ribbon appears. That's just visual, it doesn't affect the signals. Now let's talk about the signals themselves. You'll see 3 types on your chart. First, the small circles. These are your tier 1 signals. They trigger the most frequently. They fire when price touches the marked levels from our calculation. These are for experienced scalpers who want to catch almost every bounce. Second, the triangles. These are tier 2, the sweet spot for most traders. They trigger when price pushes further out but doesn't have enough momentum to reach the extreme zone. If you're not sure which tier to trade, start with this ones. Third, the diamonds. Tier 3, these are the big ones. When you see a diamond, price has deviated significantly from its average. These have the highest probability of a strong reversal back toward the mean. But they can also signal a potential trend change if price breaks through, so keep that in mind. You can toggle each tier on or off in the settings. My recommendation, start with just triangles enabled, get comfortable, then add circles if you want more trades. Remember, thanks to the trend filter, you only see the signals that match the current trend direction. Green buy signals when price is above the ribbon, red sell signals when below. You'll also notice these labeled lines projected to the right of the chart. These show you the exact price levels where the next signal would trigger for each tier. In a bearish trend like this one, you'll see sell 1, sell 2, and if you have tier 3 enabled, sell 3. These tell you exactly where the next potential entry is, so you can plan ahead and set limit orders if that's your style. The counter trend levels are hidden to keep things clean. You don't need to see buy levels when you're only taking sells. Your exit target is on the liquidity levels instead, which brings us to the most important part. These dashed in solid gold lines on your chart are liquidity levels. They represent the previous highs and lows from higher time frame candles, zones where a lot of orders are sitting. Price naturally gravitates toward these levels because that's where market makers and algorithms are hunting liquidity. By default, you have 2 sets enabled, daily and 4-hour. The daily levels are the solid lines and the 4-hour levels are the dashed ones. You can tell them apart by their thickness and style. See this label right here? It says liquidity target with the exact price. That's your take profit. The indicator automatically finds the nearest relevant liquidity level and marks it for you. In a bearish trend, it marks the nearest lower liquidity level. That's where you'd exit your short. In a bullish trend, it marks the nearest upper liquidity level for exiting your long. Let me show you a pro tip. By default, you have the daily and 4-hour levels, and those work great for most time frames. But if you're scalping on the 1-minute or 3-minute chart, the daily levels might be really far from your entry. In that case, you can add a closer time frame, maybe the 1-hour or even the 15-minute, to get tighter targets. Just go to the liquidity level section in settings. You have 2 slots enabled by default. You can change their time frame to something closer to the time frame that you are trading on, and you will have closer targets for quicker scalps. So the full workflow: signal fires, you enter the trade, and you exit at the nearest liquidity level marked as your TP target. Simple as that. For the stop loss, we recommend using a 1-to-1 risk-reward setup based on the nearest liquidity target distance. Let me walk you through a real example. Look at this chart. The ribbon is red, so we're in a bearish trend. We're only looking for sell signals. Right here, we get a sell 1 circle. That's our entry. Now, where do we exit? Look down. There's our liquidity target label on the nearest lower liquidity level. That's the target. Let me go ahead and set up this trade example for you with the marked levels. Price moves down, hits the liquidity level, we're out. Clean trade, clearly defined entry and exit. That's the rhythm of it. Follow the trend, enter on signals, exit at liquidity, 1-to-1 risk-reward setup. Rinse and repeat. Now here's one of the most important tips I can give you: knowing when not to take a trade. Look at this example. The trend is bearish. Sell signals are firing. Everything looks normal. But notice something missing. There's no liquidity target below the price, no TP label, no lower liquidity level to aim for. What does this tell you? The liquidity below the current price has already been swept. There are no more resting orders below to pull price lower. And when there's nothing left to hunt below, where does price go? It looks for liquidity in the other direction, above. This is actually one of the best early warnings of a trend reversal. When you see sell signals firing, but there's no downside liquidity target, that's your cue to be cautious. The trend may be about to flip. Instead of taking those sell signals, step back and wait. Let the ribbon change color, let the buy signals start appearing, and then take those fresh entries in the new direction with a clear liquidity target above. Think of it this way: the scalper tells you when to enter, but the liquidity levels tell you whether the trade has somewhere to go. No target, no trade. It's that simple. Here we will show you more examples of trade setups so you can get even more familiar with how setups look like. That's it. Keep it simple. Trend tells you the direction, signals tell you when to enter, liquidity tells you where to exit. That's the full rundown on the Valhalla Scalper. If you have questions, drop them in the Discord or Telegram group. We're always happy to help. As always, manage your risk, remain consistent, and let the signals come to you. See you in the next one.